Eric Noll, dark pools are back in the headlines again with allegations against ITG, as well as regulators speaking with Credit Suisse and Barclays about their dark pools. So are we going to start seeing greater action against dark pools and more pressure from regulators?
I don't know if we're going to see more action and pressure from regulators. I think this is part of a series of activities that have been going on in this space for quite a while now. I think it's out of concerns, perhaps driven by the Flash Boys books and other concerns about the ATS space, but clearly this is part of a long-standing series of investigations into the space.
Can you just remind everybody once more about why dark pools are necessary, why the market wants them, needs them?
Sure. We operate two dark pools at Convergex, and we just recently re-platformed, we recommitted ourselves to the space because I think they do some very valuable things, and as long as the dark pool is doing those valuable things, they're going to have a role in the marketplace. So those things are, does it offer a chance for price improvement? So on our Millennium dark pool, we in fact only do midpoint matching, so by definition you're getting the middle of the spread and getting price improvement. Is it fair? Is it fair for market participants? Is there liquidity there? Is your information protected? And so we've really invested in that space. We've gone to direct feeds. We've really tried to level the playing field. We've tried to provide price improvement for our clients, and we've seen a nice growth in that business for us. So I think there's still a role for off-exchange trading in ATSs, but I think you have to do it in a way that adds value to your client.
All right, and now Convergex offers trading around the world. You offer investors a way to get involved with, I think, over 100 countries, markets in 100 countries. Just want to find out what you're doing in China right now with all the government controls there and the devaluation of the yuan. Must be hard for you.
It can be a little challenging over there. The biggest issue for us, or it's not actually an issue for us, is our clients have not asked, and we only deal with institutions, so we don't have any retail investors. Our institutional clients have not asked to invest directly in China. Most of our orders they're coming from our clients, they want to trade the Hong Kong market. So they're not looking to bridge into Shanghai or some of the other mainland Chinese markets. So we've had a little bit of an insulation from that impact. But I think one of the big challenges is the volatility that whips through the market. When there is a yuan devaluation, for example, your clients start moving their order flow around very quickly in that kind of environment. And so being nimble and being able to accommodate them in their needs in those times of market crisis is very important for us.
And you're also very big in trading ETFs. And we've heard a battle recently between Carl Icahn and Larry Fink. Maybe it's not a battle, but Carl Icahn certainly has been chiding Larry Fink, saying that there's a problem with high-yield ETFs, for example, saying there's not enough liquidity there, and that could have a major effect on the market. What do you think?
Well, I think what's interesting about the ETF space in general, and I think in this particular issue specifically, is the liquidity is not mirrored by what you see on the screens, right? What was really true is because ETFs are really a collection of assets that are either created or redeemed out into the ETF. So I think the liquidity that we're talking about here is really liquidity of the underlying markets. And so an ETF really mirrors, its liquidity really mirrors not itself, but the market it represents. So to the extent that you believe the high yield market has poor liquidity, the ETF will have poor liquidity and can represent a challenge. But to the extent that the market doesn't have that liquidity concern, the underlying market, the ETF always has the availability for there to be liquidity in it because market makers and other market participants, for example, we're an authorized participant in most ETFs that are listed for trading. That means that people use us to create and redeem new ETFs in the marketplace. So we can go to the underlying markets and help them buy the components, help create the new ETF and give them the ETF. And so it really is driven by the liquidity of that underlying market, not the product itself.
All right, well, thanks a lot, Eric.
Real pleasure. Thank you.
And thank you for watching The Street.